Hi, fellow traders. I hope everybody had a great week this week. In this video, I'm going to recap my trades from Friday, let you know where we ended up for the week, and a couple of changes that's going to be taking place this coming week that should be great for everybody. But the message that I have up here, the grind can't stop, is I can't say that enough. Okay, if we are winning, if we're making money in the market, we still grind. If we're losing money in the market, we still grind. If we feel that we've made it, we grind. You know, it takes hard work and determination to stay on top of this game, to continue to be profitable and to continue to stay out there. I know for some, it looks easy. It looks effortless. But it took years of grinding to get to that point. They put in that, what I call sweat equity, to get to where they are. I put in that sweat equity to get to where I am right now. You know, but our grind has to be focused. You know, we can't go out here and watch everybody's videos and read all these books, and that doesn't get you anywhere. Once you get to the point where you know what type of trading you like, you have to focus your energy, focus your grind on that. You have to, and it's not watching videos and reading books so much anymore. It's screen time. You can't shortcut screen time. The more price action you watch, the more stocks you watch go through your setups, the better you're going to be. It's all about getting in that screen time. And that's where my grinding was at night. It was focused on screen time, and it was focused on watching those that trade like I do, or that's similar to me, and helping me, you know, develop my style. And everybody is going to develop their own style. And I've had several traders that, you know, say, look, I like what you do, I learned it, you know, but I added this to it, or I added that to it, and it just works for me. And I'm like, that's what it's all about. That's what it should be all about. It's not about following somebody to the end of the earth. It's about learning it, adapting it, making it your own. There's nothing wrong with that. And then taking it and expanding on it. And the more you grind, the more you put in, no matter how successful you are, it's going to help you continue to climb that ladder and get to where you want to be. You know, there was a, you know, I know I'm telling my age here, but Emmitt Smith, back when he played for the Cowboys, you know, there was a commercial that came out that, you know, at the end it said, all men are created equal. Some just work harder in preseason. So we can take that and say all men are created equal. Some just grind harder after market. And that's what it's all about here in trading. You know, I remember that commercial, and I used it when I was playing sports, you know, back in the day. That was something that resonated with me. And this is why I talk about, you know, really trying to develop you as a trader, because you and really start looking at things that happened in your past, things that you could bring from your growth, from growing up. Some of those skills, some of those things that you used, you can bring to the present. And it just helps you take off and move to another level. You know, it takes hard work and dedication. But if you continue to focus on the grind, and your grind is focused, the opportunities will come. Then the question becomes, are you ready for those opportunities? That's the question. When the opportunities are going to come, if you continue to grind, the opportunities are going to come. They may not come when you want them to, but when they come, are you going to be ready? Now, I didn't share this, but I was challenged by several traders because, you know, you've heard me say that teaching was my passion. It's one of my teaching and trading was my passion, and it was great that I could put those together. And it said, if it's your passion, then, you know, why are you selling this class, that class? You know, why are you doing that? Why not just put it all together and make it a part of what you do every day? And I thought about it, and I thought about it. And, you know, that's what prompted me to do it. You know, I didn't want to say it. I guess I was kind of embarrassed at first because I didn't think about it. But, you know, that's my mission. You know, this is my place in this industry. And so I decided to put my money where my mouth is. And that's how this one subscription came about. You subscribe to the community, you get everything I have. All of my classes come with the subscription. It doesn't matter whether you subscribe monthly, quarterly, or yearly. There's no segregation in the community. Everybody's just as important. Because I know when you start out, you don't have a whole lot of money to dump in this. You know, you want to learn this so you can make money. And I'm trying to make it as easy, as seamless, and as affordable as possible. So you get my Day Trading the Average Joe Way class, which is 20 classes, which covers everything that I do in terms of day trading, the swing trading. But what I feel is the most important is the psychology course, the trader's mindset. I feel that's the most important. You know, and these three together were $21.48 is what I had them for. And I'm just putting them all in. And once you get in, you'll never have to pay another dime for any class that I bring out. You just pay your subscription fee. So that's all you do. Now, if you want to get in under the old subscription price, because next week everything starts Monday. New classes start Monday. Everything starts fresh Monday. So if you want to get in and you want to lock in the old pricing before it changes, you got to go to my website, averagejoetrader.com, and go under the services page, and you sign up for the original yearly subscription. That's automatically going to get converted to the new one. But anytime you renew, whether it's monthly, yearly, quarterly, you renew at the price that you initially signed up for. So seamless, no ifs, ands, or buts. If you're in by 11:59 on Sunday night, you're good. You're in. It's just that simple. So come join us. You know, my main goal is to try to get everybody ready to hit 2018 running. I know we are going to have these big goals and everything, and trying to, you know, build our finances or secure us financially. It's something that we do every year, I believe. So let's hit 2018 running. And this is going to be a great start. All right, so let's look at ATVI. This was the first trade I took. And this was key. This was a great teaching moment in chat because this stock washed out so fast that I couldn't get a clean entry on it. And I wasn't chasing this thing down, and I needed to wait for it to really reset itself. Here's a 5-minute opening range low. Now this is the setup that I like to trade. And you know, we had this huge sell-off, long 5-minute candle. We had this huge wick. So the ideal entry on this would have been getting in under this red to green where it tested VWAP under red to green and everything. I missed it. I was running my mouth talking and missed getting in this trade. So I had to wait. I let it continue down. I didn't let it get frustrated and all of that. I said, I'm gonna wait, take it on the 5-minute opening range breakdown. What I have to do is let it close below. I need to let another candle, you know, I need to see the right price action. And this candle, I know it hit some people covering. And it's almost like now we're finding people covering at the 5-minute opening range low. So once you let that happen, then you get a chance to get down. So I missed the larger move, but using this strategy, I was able to get the smaller move. And I didn't trade it perfectly. I didn't take it, you know, normally you would want to take it at the next level of support you run into, but this was a little bit too close from where I got in, so I had it set for 63, the whole dollar mark. So I got a piece here, and I ended up taking some more off here because it seemed like we weren't going anywhere. Then finally we started to sell off, and I was going to leave that last piece on, but ended up getting stopped out back at break even because, you know, it popped up on that candle. And then we did finally tap 63, but I wasn't in yet. When it went back and rejected this again, I got back in again under the 20 and the 9, and subsequently nailed this move. Now, the whole key was being patient. This was the easiest and the quickest move and the most volatile move. But if you miss it, you have to wait and reset. The market's going to give you other opportunities. If it doesn't set up, oh well, you just missed that trade and it's time to move on. But if I had let this get into my mind, you know, yeah, I'm disappointed that I missed it. Yeah, I may be mad at myself for, you know, talking and looking at something else when I should have been paying attention to this. You know, yeah, that made me upset with myself, but I didn't let it throw me out of my game. And I worked this as well as I could. You know, it just didn't hit my 63 target before it went up and stopped me out. You know, and that's fine. This is trading. Then I waited and got a solid move here and ended up 266.70 on this one. I mean, that's not bad. Trading 300 share positions. So real happy with this one. And it just shows, you know, what patience can do. If you wait, you have the right patience, and you trust your technicals and you allow the trade to work. And, you know, in chat, I talk myself through this. Every trade I take, I talk myself through it. You know why I take it, what I'm thinking while it's going on. And You could always ask a question. They'll be glad to answer them. But what we're doing is we're developing the skill that we need to trade. Scaling out, especially when you're just starting out, what it does is it gives you, when you scale out and hit your first target, it gives you that confidence, that belief that, you know, you're doing the right thing. And once you have profit locked in and you set your stop back at break even, worst case scenario, the only profit you lock in is from your first target. If it's $60, $70, then hey, at the end of the trade, you're going to grow your account by that much. You do that 3 times a day, that's $120 a day. I mean, $180 a day. So, and this is what we're looking at. We have to develop the confidence. We have to develop the skill. And as we develop the skill, the confidence comes. And we learn through this time that we have to stay and trade within ourselves. We can't just jump up all of a sudden. If I have enough buying power to take 600 shares next week, that I take 600 shares, because I may not be ready for that. You know, what if this had gone the other way? And it kind of did. It sold off. This candle opened up here. It got bought up a little bit to this level. What if I was in heavy? Would have freaked me out. Especially if I had been watching my P&L. So that's why you don't watch your P&L. I don't care about what I made until the day is over. Because if not, if you have these monetary goals, if you say I got to make $1,000 a day, or I got to make $200 a day, it's going to force you into taking bad trades. Or if you take a trade and you got 150 bucks and you're like, all I need is a little $50 trade, before you know it, you're down 150. So if you focus on numbers, you focus on making X amount of dollars, especially when you're new, when you get more confident, more years under your belt, you know, maybe you can do that. And maybe you have developed the right mindset where it doesn't really bother you. But watching your P&L while you trade is detrimental. Okay, there's no way around that. It is detrimental. So data was a bad one. I kind of waited and was looking to catch this coming out of lunch. I was looking for the sell-off down to the 90 here from the daily. This is the 90-day from the daily, this level here. And it looked pretty good. Now, the reason why I didn't take it up here off this rejection was exactly why, you know, I didn't want to hold through all of this. I wanted it to establish below all of this resistance so I could use that as my guide. You know, I wanted it to establish below all of that. So once we did, I was looking for the move. Now, we should have had a clean move down, but we didn't. So I took some profit here and ended up getting stopped out, but with some slippage here. So that really, you know, that put a dent in the profit here, which is something I've noticed lately. You know, when it goes through, when you do a market stop, it goes through the house route, the SMAT route, and what happens is oftentimes you get slippage because the house is filling you. You're not trying to mark like with ARCA. You know, when this goes through ARCA, it has to match another order on the other side of ARCA. There has to be another order there to take it out. If there's nothing there on ARCA, then it won't fill at that price. But doing a market, it's going to go out to the best price or whatever. And when you use it, when it does a house route, it's going to do the best that it has in-house, so to speak. Or to me, I guess, whatever it wants to go to. But just recently, I've noticed a little bit more slippage than normal, which is going to, cause me to change up how I do my stops now. So the second trade, I got it on the rejection of the 20 here. I was anticipating a little bit, yes. But, it happens. I'm sorry, here it is. This is where I got stopped out. Here's where I got back in when it looked like we were rejecting the 20. I got in. It went down a little bit. Then we recovered. So I was still holding it. Looked like we were going to make the move. They caught it again. Rejected the 20 again. Thought we were finally going to make it. This is like the second, third time we rejected it. And all of a sudden, we get bought back up. I get stopped out. So I did have a little bit of money on this trade after the first one, but the second one took me negative. It's just one of these that didn't work. It set up, but it just didn't work. And probably because the volume was a little low on it. I try to use 50,000 shares volume as my guide. But here the volume just really got bad. And when the volume came in, it was, buying volume. So just kind of messed me up on that one. But I would still take this setup. I mean, this is a solid setup here. This is a clear sign of weakness. We pulled back, rejected VWAP here, held this level, went up, rejected it twice. There's no reason for me to expect this to come back over VWAP or to hang around, with this double rejection here, and lost this level, this daily pivot. So, I mean, it's just one of those trades that it sets up for you, but it just doesn't work. You just move on and go to the next trade. Now, those of you that were in the market late, with me, I told you I was contemplating doing what I said I was not going to do anymore, is to get in, while I'm gone. But I had a conviction that this stock was going to go back up. That's just what I felt. And I was like, okay, I'm going to take it. And, so when I got back in the room, if you were with me after the market, you got to see this and you got to hear my thoughts on this. But it just didn't do anything. And I held it. I knew I was going to be sitting there for a while. So I just kind of held it and watched it and held it and watched it. And once we got a little pop up here, I just went ahead and took some profit. I know it was only $33.76, but I had, number one, I had to get out because after 5:30 I couldn't get out, and I didn't want to be stuck in this over the weekend. But just had to sit here, this long, painstaking process. I was expecting it to pull back up to at least 63.50. That was going to be my target. It did go to 63, but I just didn't take it off. I was waiting for another bump back up and thought we were going to get that, but we saw it pull back to the 20. And I was getting messages like, why are you still holding it? Why are you still holding it? I still had conviction. I was trusting the technicals here at this point. I know I didn't have a whole lot of volume, but I was ready to dump it if I had to. But not something that I normally do every day. I was in it, so I was like, why not try to win it? I'm protecting myself. I don't have anything else to focus on, so why not? But didn't turn out as well as I wanted it to. I thought we were going to squeeze some more shorts. Really. But was wrong on that one. So ended up today after commissions 160.42. Excuse me. Not bad. Not bad. Could have been better. Had I not taken this other trade, it would have been well over $200 a day for me. But no, it is what it is. It's the day I made for myself. I missed the big move at open. And a lot of times when you do, you're going to have to grind it out and take what the market gives you. And that's what we did. Okay, going forward, I'm going to be using TraderView to journal and track my trades. I think they have more charts, more analytical tools. I am going to try the free version first and see how that works. So starting next week when I do my weekly recaps, I'll be using TraderView. If you don't know, my account was hacked for the second time this year, and I don't want to go through that anymore. And one of the things that they told me that I didn't need to do was to allow third parties to access my account, and that's what I was doing with Profitly. Not to say the problem is with them, but it could be in a transition, whatever it was. I had my account number streaming on live and chat. I had it on the videos, and I have to protect myself. So TraderView does look like it offers more. I'm going to try the free one first. We'll see what it does. If I need more, or if I really want more, then I don't mind paying for it. Journaling is something that you just can't skimp on. Something that you have to do as part of getting better and staying on top of your game. It's part of that grind that I was talking about. So we'll see how that goes. And every trade I take, you see in chat, you see it update, you see the results of it. So all that matters to me is that you guys in chat see it and know that this is what we're doing. So that's my number one priority, that you see, you have the opportunity to see it happen live and in color. I think that's the key to what we're doing. So here's my week. Now I put this calendar up on the website. I've got a calendar for the classes that we do, the class calendar, and I put this up as well. And this is just where I ended up each day. And you can see Thursday is the only day that put a big dent in it. That one trade, that one disaster that I had, all because I didn't check, or didn't really make sure that the Windows update wouldn't cause any problems. It ended up causing problems because I didn't check it, and it cost me. Now I can't blame anybody but myself. I can't blame Windows for the update. Even though it might have been flawed, it's my fault. In the end, it's my responsibility to accept it or not accept it. And I accepted it, didn't follow up on it, and it bit me. So really could have had a nice week going, had I not taken that loss. Really could have had over $1,000 week. which is not bad trading with the limited amount of buying power that we're trading with. And this is key. This is about, based on where we started the week, this is about a 21% growth in our account this week. Which is, I mean, obviously we want to do over 50 to really be on top of things. But, 20%, over 20% is not bad. Still, you can't put your money in the bank and get 20%. Maybe if you were a loan shark, but then you'd have to chase the guy down and threaten to break his legs to get his money back. But, that's not bad. That's not bad interest on our money in a week. So we're going to continue to grind out these days and just keep moving forward. It's all about doing what we have to do every day, putting in that grind, putting in that work. Because eventually it's going to get to the point where it's effortless. It's like second nature to us. And when people see us do it, they're going to say, man, it's just so easy for you. But it didn't start out that way. It takes time. It takes putting in that sweat equity. And it takes getting hooked up with the right people. So if you're still looking, if you're having trouble being profitable, if you've been doing this for a while and you just can't seem to get on the right track, come and join us. Learn the process. Trust the process. And once you trust it, and once you start to develop that skill and you start making a little bit of money, you're going to grow into your own. And you're going to take what you have and you're going to build it. You're going to make it your own. And then you'll be an independent trader. You won't need anything. So that's my desire for everybody I work with. That's the goal I have for everybody, is for them to develop into their own trader. And that they get to a point where they don't need me or anybody else to make money every day in the market. And that's my goal. So you guys have a great weekend. I got to hit the road here. And we will see you tomorrow morning if you are part of the, if you want to join in on the swing trade watch list bill. That's at 9 o'clock. Don't forget the time changes, so you want to make sure your time changes so you're there at the right time. But I'll still be doing that. I'm pretty sure we have internet. I always have it up there, so we'll be doing that 9 o'clock tomorrow morning. So everybody take care, and if I don't see you tomorrow, I'll see you Monday morning.